Good morning, traders. Today is on 21st of May, 2026. So it's a good day. We begin by checking what Forex Factory has for us. So in the morning we had AUD, employment change, and unemployment rate. They were released and they were impacting the asset negatively. So therefore, this was a sell for this instrument. So now for the upcoming data, we have the GBP BOE. Governor Bairi will be speaking at 6 p.m. Kenyan time. So that's all what we have in terms of other news. Bank of Japan policy board members code says arraying inflation. So, but it's not. This is just a broad, not a high impact. Arraying inflation already around 2%. So, like in terms of that, that one has no impact, but still is good to know where the inflation of Japan it is, because we usually trade this asset by the name JPY. So it's always good to understand that. So in terms of the calendar, we don't have any other event apart from that one for BOE governor. So at this point, we check the forex instruments here. So for now, we begin by touching gold. So we can be able to align ourselves and see what we are going to achieve at the end of this. So we have different setups, and I'm going to delete my drawings so that I can be able to draw fresh zones and useful zones. So number one, at this point, we have a buying point here. We have a buying point there. So then at the same time here we have a selling point. We have a selling point there. So like there's that zone. So you don't just stay fixed with a zone. So like having two zones in the 1 hour time frame will give you 4 criteria. Having six zones will give you 6 criteria. Having 3 zones will give you 6 criteria. Number one, in the first criteria, the market to come all the way to this point. Then we look to buy the asset. If it does not, you check if it breaks below and continue selling. Then the price to come and touch the zone, reverse, or the price to continue moving on the upside, retraces, then continue buying. So those are the 4 criteria that we have in terms of gold on 4 hours time frame, and not 1 hour time frame. So we jump to the other time frame so that we can be able to align ourselves, and we see what we can be able to interpret based on the day trading, because that one for 1 hour, that's swing trading. So for the day trading, we have the same zone, high probability, this zone, the same zone on 1 hour time frame. So it's a very high impact. So now what has changed on the upper side is because of this market structure shift, we can be able to see market shifting from a bullish trend to a downtrend. So at that point, what you need to understand as a trader is that there is some selling opportunity at the top here. So number one, at this point in terms of the daily time frame, but these two zones, I don't trade zones above in collide with each other, because number one, I don't like fighting with the trend. So because number one, hapa kuna two zones ambazo zimecollide with one another. So like what you just do, you just wait to touch the zone on the higher time frame, then you can be able to check for your opportunity and look forward to be able to trade well like a pro. So that's what you need to understand in up to that point. in terms of gold. So where do you target to buy your this instrument? Number one, you target to buy at this point, you target to sell at this point. So having selling at this point is a good one. So you target this point based on, if you take on this signal that is here, that one, you target the bottom point the market reached, and that one will give you an opportunity of 400 pips. It's not a bad one, it's a good trade. So giving you 400 pips is a good trade. Then from there, we have a fair value gap. At this point, the market moved aggressively. So the market must come to fill that gap so that we can be able to see something forward. So number one, the two zones we are expecting the market to react to is this one. We see a bullish reaction. But in case it fails, so we can be able to interpret the information in a different scenario. So if it just breaks the FVG, even if it retraces on the upside, don't buy first. Wait, don't sell, because at this point we usually say when it retraces, enter sell position. No, don't enter sell, because there is another zone at the bottom. So you look at buying at this zone and continue on the upside. So those are the two criteria that you have in terms of that zone. So you just choose the one that fits you and fits your style. So remember, this is a business of risk management. So if you don't have proper risk management, this business might go bad for you. So we check the other asset by the name GBPUSD. We see what we have for that instrument. So for this instrument, we are quite bullish also. So like the zones ambazo tuna expect for the reaction to be in terms of the daily time frame. No, in terms of day trading, I'm expecting some reaction. So for this instrument, I'm expecting some reactions to take place at this point. So what am I going to do now? I'm going to draw the order block where it should be drawn. So for me, I already have the tools that are giving me where to draw the order block, depending on that time frame in niko. So at that point is a good position where is a good point where that you need just to enter a wrong position, then target on top, giving you an opportunity of around 50 something pips. So that gives you a clear buy position. So, but you must consider these liquidities. The market must take out the liquidities before you see the move. So you must extend your stop loss a bit if you are going to place a pending order, so that you avoid unnecessary losses in this business, and that's what we have for that. So that one is okay. So just look to go long for this instrument, then we see the way forward. So in case it fails to come all the way to that point, check on it breaking above this zone. Check on it breaking above this sell zone. If it breaks above that zone, it gives us another information. It gives us another information in the market. So the bulls are still in control. So you can find a way to be able to enter a wrong position on that instrument. So then we move to the USD JPY. So remember that asset that we are from. It is widely affected by the news that you are able to see on the chart, on the calendar. So the next thing you need to do, you can be able to see market structure shift here. At this point, you can be able to see the structure shifting from downtrend to bullish. So gives you a good entry position for your asset, and you can be able to be well aligned. So let's use a 15 minutes time frame is better. So in the 15 minutes time frame, you can be able to align yourself on that, and you just extend your instrument. Then you use your forecast wrong position there. Then you target where we have the sell zones, and the liquidities where they are going to be taken out. So at that point is where that we are expecting the liquidities to be taken out, so that we can be able to see a reversal. So at this point we buy. This instrument at this location is a good location for buys. That's for day traders, and this location is good for selling opportunity. If you sell at this point, you are okay. So like when the price comes all the way to that point you look for short position targeting bottom side, then just do that and everything becomes well. So this zone is a sell zone, while this zone is a buy zone. So whichever the side the market will go first will give you an opportunity. So your work is to wait for the opportunity to be reached and be activated. So then from there we just enter into the GBPJPY, so that we can be able to see what the GBPJPY has for us. So for the GBPJPY has another different structure. So like we can be able to see a break of market structure on the downside. You can be able to see that. You can be able to see this market structure, break of structure at this point. And internally, we have the market structure shift. So when we have the market structure shift at this point, we said that we usually look for the last green candle, and we use it to draw an order block. And when you use it to draw an order block, because number one, the market is checking on the downside. So what you do here, just come and enter your sell position, because number one, the analysis is already done. You can be able to see there is a sell zone by the bots. So for me, what I just only need just to come to a line and give you these entry points. So that's the entry point number one. So if for the buy position, we look to buy at this point where we have this order block by OB. So that's where we have the buy OB. So like that's what you really do. You look to buy this asset at this location. So and when you buy at that location, you are going to target the highest point the market reached. So like if it reached here, that's the zone that you are going to target for for the buy position. So that is a good long-term trade that you can be able to give you some good numbers of dollars. So at the end of the day, it will give you something. So that's the buy zone. This is the sell zone. So and if the market breaks below this point, because you already utakuwa ushafunga, if the market breaks below this point, so what you should do, so if it breaks aggressively, so what you should do, look something like that, then continue selling to that location. So hapo hivyo tuko na that scenario. Ikishafika hapa wait for retest, then buy. So ikishafika hapa retest, sell position that way. So like for the sell price for this asset, work at 213.533, and for the buy position here put 212.777. So that is good. So like for this ya katikati, you just check the continuation pattern, then you enter a sell position. If it so remember to be taking partial profits so that you can be able to learn risk-free trade. So that's what is there in terms of that instrument called the GBPJPY. So then we touch for the euro. So for the euro doesn't have much. It is the same. It is giving the same structures like the other asset called GBPJPY or GBPUSD. It's giving almost the same structures. So we can be able to see market structure shift at this location. So where is your sell position or your sell targets? Your sell targets is here. Because number one, there was a break of market, there was market structure shift at this point, giving you that, or telling you that the market was bullish, but now sellers are stepping in. So when you sell at that point, you target the bottom point there. When it comes all the way to this point, we have some buy is on there. So what you majorly do, you just enter a wrong position, a buy position at this location, and you target the previous high the market reached. So the previous high is that one. So then in terms of why did we use this order block? Because at this point we had a break of market structure. This point we have break of market structure. At that point we have the BOS. So that's why we have that buy position there. So like when the market comes out all the way to this point, you just when it comes at this top here, you check something like that, then retrace, then target on the downside, and when it comes on the downside, wait for something like that retracement, then enter buy position. That's all what we have for those four assets. So just align yourself with them, and we see the way forward. So thank you, and have a wonderful day.